Good morning, student. Today is 23rd May 2020 and my lecture number 42. I am present with new chapter. This is dissolution of partnership firm. This is the part of partnership chapter, and we have to study about dissolution of partnership firm. So first see the meaning of dissolution. Meaning of dissolution. The term dissolution with reference to partnership refers to discontinuation of business relation among partners. Since partnership is based on agreement, so any change in the original agreement amount of to dissolution of partnership. Here, dissolution of partnership and dissolution of partnership firm, both the terms have been separate meaning. So, first, dissolution of partnership. Dissolution of partners. Dissolution of partnership refers to change in the economic relationship among partners without affecting the continuation of business. Under dissolution of partnership, change in profit sharing ratio of existing partner, admission of a partner, retirement of a partner, death of a partner, and amalgamation of two partnership firms comes under the dissolution of partnership. These terms are comes. This is called dissolution of partnership. We have studied about all this chapter except amalgamation of two partnership firm. We have explained about all these 4 chapters. Now Second point is dissolution of partnership firm. Dissolution of partnership and dissolution of partnership firm. So dissolution of partnership firm refer to complete close down of the business of the firm. In partnership, dissolution of partnership, continuation of business is not affected. Only economic relationship among partner is affected. But in dissolution of partnership firm, business complete close down and all the assets are disposed of and all the liabilities are paid off. Therefore, the account of partners are settled and paid. A firm is dissolved under the many circumstances. For example, all the partners of firm give their consent. Firm business becomes unlawful. Case may be all the partners consent B. When firm become unlawful, C. Order of court etc. are the terms comes under dissolution of partnership firm. We can differentiate between dissolution of partnership and dissolution of partnership firm. In case of dissolution of partnership, change in profit sharing ratio, admission, retirement, etc. take place. In case of dissolution of partnership firm, business closed down. Continuation of business is not affected in dissolution of partnership, but this effect continuation of business. Dissolution of partnership may or may not involve dissolution of firm, but dissolution of firm always involves dissolution of partnership. Assets and outside liability are revalued in this case, but in case of partnership firm, asset are disposed of and liabilities are paid off. So this is the main term of partnership and partnership firm in case of dissolution. Now next point is modes of dissolution of partnership firm. Broadly speaking, a partnership firm is involved in two ways. Namely, first, dissolution without the order of court, and second, dissolution by court. Dissolution without the order of court, without order the court, means with consent of all the partner, partnership firm may dissolve. When all the partners save become insolvent, save one become insolvent. When business becomes unlawful on completion of venture, dissolution by giving notice if the partnership is at will. On expiry of term of the firm, etc. are the rule include under without court, order of court. But in case of dissolution by court, if a partner become man of unsound mind, if a partner is guilty for misconduct, if a partner transfer his interest in the business without the consent of existing partner, if a partner consistently and deliberately commits reach the agreement, if court find that the dissolution of firm is justified, these are the condition rule for dissolution of partnership firm by the order of court. Now the point is accounting treatment on dissolution of partnership firm. It has been stated earlier that all the assets are disposed of and all liabilities are paid on dissolution of firm, and the balance, if any, is distributed among the partners. So there are 4 accounts may be prepared for the complete the dissolution process. First account will be realization account. Now, what is realization account? Realization account is opened in the books of the firm to dispose of all the assets and to pay off all the outside liabilities. It is a nominal account. Student, remember, realization account is a nominal account. It is prepared to determine the profit or loss on realization of assets and payment of liabilities. Profit or loss arising on realization is transferred to partners' capital account or current account in their profit sharing ratio. So it will include various journal entry and format. Second account will be partners loan account. Partners loan account. We all know about loan account, so not need to explain it. And third is partners capital account. This will be same as we have read in previous chapter, death, retirement, etc. And fourth point will be bank account and cash account. Bank and cash, we all know, when cash is coming in the business, it will be debit, and when cash is going, it will be credit. Debit what comes in and credit what goes out. On the basis of this formula, this bank account and cash account will prepare. Now, I am going to teach preparation of realization account and format of realization account. So, see, this is the format of realization account. DR side, CR side, particular amount. First, in debit side of realization account, all the assets from balance sheet will transfer into debit side of realization account, various assets. So when we will pass journal entry will be realization account DR to assets account. Except cash, all the asset will transfer into debit side, because cash will shown in cash account, so cash will not transfer from balance sheet to realization account, and all the liability will transfer from balance sheet in realization account credit side. Except capital, reserve, workman compensation, etc. Now, journal entry for this will be liability account DR to realization account. And when assets disposed of or sold, then cash will come. So when assets sold and cash will come, it will be cash or bank account, and give the name of assets under cash account, that is stock, plant, machinery, debtor, etc. And then by adding it will transfer into final amount. All those asset which has been sold, and same journal entry will be cash account when asset sold, journal entry will be cash account DR to realization account. I will explain about journal entry also in our next video. This is the format of realization account. Now, when liability paid off, then journal entry will be realization account DR to cash account, and cash account liability means creditor, bill payable, etc. will paid off, and it will transfer into final amount. Now, any expenses done by business, for example realization expenses, it will also put in debit side, bank account or cash account, and in bracket it will be expenses. Now, any liability taken by partner, then it will transfer into partner capital account. And when in case any asset taken by partner, then it will also transfer into partner capital account. So partners capital account. Now, any unrecorded assets sold off, then it will be cash account. Unrecorded assets, and any unrecorded liability paid off, then it will be cash account in debit side, unrecorded liability. These are the main point transfer into realization account. When in liability side, investment, fluctuation fund is given, then it will transfer into credit side of realization account, but there is no need to paid off in debit side. I will paid off only liability in debit side. When in balance sheet loan account of partner is given, then it will transfer into partner loan account, not in realization account. But other person's loan account is given, then it will transfer into credit side of realization account. Suppose bank loan, creditor and other person loan also will transfer into credit side, then it should be paid off. But partner's loan will not be transferred into realization account when given in balance sheet. And last, it will balance, and then when profit, it will be same as I have calculated the profit on revaluation account in admission, retirement, etc. So when profit on realization, it will transfer into partners capital account ABC in old ratio. In this chapter there will no need to calculation of new profit sharing ratio, gain ratio or sacrifice ratio. So these are the points. I will meet you in next video. Thank you very much.